How's it going, everybody? This is going to be a quick overview of what's going on for the stock market, the U.S. stock market specifically in this month here. The news has just been so negative about everything from the stock market's crashing to I told you so, the bubble has burst. And I really want to talk a little bit about what is actually happening here, because I think a lot of it's actually super exaggerated. And in many cases, I think these are just headlines that people want to put in just to get views and whatnot. But every time there's some sort of correction, everybody kind of jumps on and says, look, I told you so. Now, I think it's important to really understand this idea of financial markets. And after Bitcoin's, cryptocurrency's major correction this year, I think it's important to be able to understand that a lot of these market cycles are actually very similar. In fact, they're really no different between crypto, stocks, real estate, bonds, you name it. There are people behind the scenes who are pretty much pulling the buy and sell trigger. And in many cases, it's just a matter of which ones are much more exaggerated than others. Definitely, crypto has been a more exaggerated market since it's a younger market versus the equities. And so let's dive in here a little bit into the S&P 500 to talk a little bit about what I think this market's getting into. So first off, we've been on a multi-year bull run for the equities. And actually, I find this to be very interesting because it actually reminds me a lot of what happened in crypto back in 2017. In fact, when the crypto market was running, we actually had the exact same type of conversations. People were saying, look, I think Bitcoin at 5,000 is super overvalued. I think it's going to crash. I also kept on hearing people saying, okay, I think this is it, and so there's a lot of people who kept on saying that the crypto market back in 2017 was just another bubble. Back in 2016, same thing, until finally everybody jumped on the bandwagon in January of 18 saying, I think this thing's going to go to 100,000, even though it already ran up to 20K. So the point I'm trying to make is that in these type of bull markets, it actually has what I call the wall of worry, the climb of worry. I guess there's a phrase out there that says that people are going to doubt these rallies as much as they can to justify not being in it. And the people who are in it, they're going to try to find an excuse to get out of it, especially when they know that perhaps the party is over. And so what I want to do here is to separate this fear and this definite psychological piece of what we'll call confirmation bias, where people tend to just confirm their original biases and say, look, I told you so, this market is going down, and look, it's already winding down, so I'm right. And forgetting that this could be a buy at the dip. So moving along to the historical piece for the S&P 500, which had you not put it in Bitcoin and had you put it back in the collapse back in 2009, you've had a pretty nice return. In fact, let me just go ahead and do the charting here. You've pretty much had about 3x return. Definitely nothing like crypto. I think 3x return was something we got back in something like Tron, for example. But 3x return is not too shabby, especially if you kept on buying the dip since 2009. In fact, I would even argue that you still had major areas of entry points right here in 2012. And you also had another entry point here in 2016 and still rode this uptrend line. And so right now we're facing, I think, a correction. I don't think this is a change in trend. And so people might be saying, look, I think equities are overvalued. I think the PE ratio is too high, and all these other things. But if you take a look at the latest earnings reports for the S&P 500 and also for a lot of these stocks, they're actually not too overvalued to the point where they're at nosebleed valuations. Now, that's not to say they are not overvalued. It just means, that they're not overvalued and they're not undervalued. The actual price action shows right here that we are still on a massive uptrend line. Now, there is a little bit of downside here, and this is something I saw back early in 2017, and where Bitcoin was really doing this exact same thing, where it was like on a massive tear, and we did have these really big 30-40% pullbacks. I would say on average it was a 30% pullback, and everybody was saying the party's over, until finally we had that massive blow off. And so although I want to say that we are definitely still on an uptrend line, the fact of it remains that there is a little bit of headway that could potentially lead into it, but I don't think this is bear market territory. If anything, I think this could be a major correction within a major multi-year bull trend. And if you take a look at the price action, I mean, yeah, it's super, super ugly. In fact, October has historically been one of the more volatile months, but even then, we're still carving out higher highs. And the low here was actually breached yesterday on Friday when we did break this moving average. And this is not really a confirmation yet. It just means that if this price does not change to the upside soon, we're probably going to be breaking a new low. And so that doesn't bode well for 18, but even then we're still going to be on top of this uptrend line. And so just to give you a little bit of an idea, going down here, another 10% is definitely within reach, but the RSI line is already floored in such a way that a bounce is in order. And so what I'm going to be doing is using my skills in crypto and taking a look at some of the fundamentals specifically about whether these equity prices are actually justified. But based on my research currently and what I'm looking at right now, it seems to me that this is going to be just a correction in there, which is going to have a lot of opportunity moving forward. Now, obviously, the prices can change. The volume actually is already picking up pretty good on the downside. So just like in crypto, right, the only difference is we're not getting those 30-40% gains like we got a couple of months ago. But we are seeing is this exact same pattern of touching this main trend lines, taking a look at breaching these moving averages and consolidating at some points and eventually go lower. Now, obviously, if the stock market begins to crack this and starts basically going vertically down, then all bets are off. But until then, I mean, I think it's pretty clear cut what's actually happening. This is another kind of like buy the dip situation. So this is actually something that, you know, as you and I, as this channel has grown, we've seen some of these moves, especially with these ICOs and also a lot of these coins. But it's really fascinating to see that in both the equity market and in the crypto market, we have the exact same FUD events coming out. You know, people turn on the TV like the Wall Street Journal, and there's a bunch of FUD, people trying to explain why is it that the stock market's down. But if we do get a blow off top for the S&P 500, that's going to be another massive opportunity to take advantage and perhaps maybe make those profits and plow them back into crypto. So that's what I'm looking at right now in terms of getting some of these shares at a very cheap price. But at the same time, understanding that we are still in that massive bull run, and trying to exit or trying to short this level could be a little bit dangerous. All right, guys. Well, take a look at your favorite stocks maybe, or maybe take a look at some of the other asset classes, because this could be something that could have another potential run. And right now, the crypto market's obviously extremely, basically it's dead. At least for now, and now we're getting a little bit of volatility coming back to the stock market. So that could be something interesting to take a look at. All right, guys. Well, hopefully you enjoyed this video. CryptoBud out.